Ethereum is crushing Bitcoin when it comes to decentralized finance. Day by day, Ethereum is making massive moves and bringing incredible innovation that is benefiting the entire crypto economy. Meanwhile, Bitcoin just continues on like a golden, unstoppable tank. But while Bitcoin is incredibly good at, well, Bitcoining, it really isn't awesome at doing much else. And I would argue that it really doesn't have to be. This video will break down decentralized finance on Bitcoin and how DeFi on Ethereum is the dominant force in the future of finance. The cryptolark. This is where you subscribe for all of the hottest and the latest happening in crypto. Now, before we begin that conversation, I just want to say that I love the start of the month because it means that it is payday. All the block fires out there know exactly what I am talking about. It is so good to get those statements every month telling you how much Bitcoin that you have made for doing not much more than just hodling your Bitcoin. If you want to start earning interest on your crypto, Bitcoin, Ethereum, Litecoin, and stablecoins, then click on the link down below to learn more. Okay, so let's get into this conversation about decentralized finance because this is a big part of the vision of cryptocurrency overall. It's about bringing financial services to everyone in the world. The vision, 1.7 billion people lacking all access to financial services. We want to bring those people into the global economy. As well as those people, there are billions more who are just woefully underserved by traditional financial services. And also, of course, to free the rest of us who do have access to all these financial services from the corrupt and intensely predatory banks. Bitcoin was and is the tip of the spear in this regard. In a way, Bitcoin was the original idea of decentralized finance when we talk about cryptocurrency. But the use case of Bitcoin, while incredibly powerful, is limited. Yeah, wealth preservation, awesome. Swiss bank in your pocket, totally cool. Peer-to-peer payments, amazing. Digital scarcity, all great stuff. I freaking love Bitcoin. Bitcoin is digital gold. It is a solid basis for the entire crypto economy. But Bitcoin doesn't really do much more than that. And I don't really think that it needs to either. Bitcoin can just be the most secure way to transfer value from point A to point B, and that's it. Bitcoin can just do Bitcoin. It doesn't actually require a lot of additional functionality to have long-term success. But there are many people out there who believe that Bitcoin can and should do everything. For example, we have the Bitcoin Lightning Network, which is a layer 2 scaling solution which will bring in a wider range of applications and use cases for Bitcoin, but it's still so far away from being the Lightning Network of promise that we've been talking about for years. It will likely be many more years before Lightning Network actually has a fraction of the functionality that Ethereum has today on-chain on the base layer. And the tough deal for the Bitcoin Lightning Network is that Ethereum has wrapped Bitcoin. Now the different variants continue to grow in value on the Ethereum network, and as they continue to grow in value and relevance, it'll be simpler, as cheap, and probably a lot more relevant to use an Ethereum layer 2 scaling solution like rollups to send $5 of wrapped Bitcoin to buy a coffee instead of sending Bitcoin. Also, wrapped Bitcoin is worth around the same value currently as the entire Lightning Network, which is pretty crazy. Although this graph does not account for private Lightning channels, which could make up as much as 15% of the Lightning Network, it still drives home the point that the Lightning Network, which has been so hyped for so long, still not there. Now, some Bitcoin enthusiasts will say, but hey, wait. We got those sweet side chains, man. Look at Rootstock, look at Liquid. It's all good. Rootstock is working to bring increased functionality to Bitcoin with smart contracts, which is definitely cool. Rootstock has certainly done some very interesting things over time. But in total honesty, rootstock is almost irrelevant in terms of anything really having been done with it that is useful and used. That may certainly change in the future, and I'm not trying to bash rootstock here. They've done some great stuff, but at this stage, the most important thing rootstock did was to build a bridge to Ethereum so that it can be relevant and have access to the explosion of decentralized finance applications built on Ethereum and their liquidity. Although there is one interesting project leveraging rootstock called Money on Chain. This is a MakerDAO-like stablecoin project using Bitcoin as collateral to issue out those stablecoins. But again, this project is way behind the curve. We have projects like Kava, which will be way more useful, allowing for stablecoin issuance backed by not just Bitcoin, but by Atom and XRP and Binance Coin and a whole host of others. And as far as the other big Bitcoin sidechain, Liquid, a federated chain run by exchanges made by Blockstream intended for moving coins between exchanges. Ooh, boring. Okay, let's move on. So today, famous Bitcoin bull Anthony Pompliano wrote a piece about how Ethereum is not money and is no different than fiat. In particular, he criticizes Ethereum for no hard cap, for its inflation, and for its monetary policy being decided by a small group of developers. And you know what? He's right. He's right about all that stuff. Except the ETH is not money part. You see, Ethereum is money. It's maybe not the best form of money for the aforementioned reasons of, inflation and all that stuff, but it is indeed money. But Ethereum is so exciting because it is so much more than that. But that being said, Bitcoin is indeed better money. You will get no argument from me there. Bitcoin is damn good money. It's got a hard cap, it's got a deflationary curve, and of course we have the fabled time-traveling space alien named Satoshi Nakamoto who programmed in the monetary policy at the immaculate conception of Bitcoin. Ethereum has a fundamentally different economic policy than Bitcoin, and that's okay. But that does not mean that Ethereum is the same as state-issued fiat. There are no men with guns who will come to your door and drag you away if you don't pay your taxes in Ethereum. It is a voluntary, internet-based economy. Ethereum is shaping up to be the value operating system of the internet. And in spite of what Bitcoin maximalists might tell you, Bitcoin and Ethereum are actually so much better together. They are in fact both crucial in redefining what money even is. And in this regard, Ethereum has been doing a lot more of the heavy lifting over the recent years. For example, we now have DAI, a crypto collateral stablecoin. That is huge in its revolutionary scope and impact. Look, now I bring up Anthony's comments on Ethereum being money because he goes on to say that the mechanics of the decentralized finance services will eventually be built around truly sound money, Bitcoin. Now this is the typical Bitcoin maximalist idea. Someday, in the far distant future, you might just be allowed to do some of the things that Ethereum is doing right now today. Let me give you an example of how this ideology works. We can use privacy as a great example here. So, to the Bitcoin maximalist, all privacy coins are irrelevant. Privacy will come to Bitcoin. You just need to wait years, potentially decades, but it'll come at some point. And besides, we already have something like the Wasabi wallet for privacy. Okay, look, Monero and Zcash, these are super relevant cryptocurrencies, and they have been critical in the advancement of very powerful privacy technology for the entire cryptocurrency space. 11 years of Bitcoin now, and there is still no privacy on Bitcoin. And you know what? Maybe there doesn't have to be. But hey, at least we do have rent-seeking middlemen like Wasabi that charge a percentage for each private transaction. So, winning. The thing that drives me crazy about maximalism in either direction, whether that be a Bitcoin or an Ethereum maximalist, is that Bitcoin and Ethereum, they are so complementary. Bitcoin can be the golden center of really good, sound money to Ethereum's beating heart of the decentralized finance economy. We can have Bitcoin collateralized loans, Bitcoin-backed stablecoins, and just good old-fashioned wrapped Bitcoin. All of that can find a nice, happy home working on Ethereum. Because the future of crypto, it's not all going to happen on one blockchain. The very notion that there can only be one chain, McLeod, that in itself is an outdated concept. It does not match with the reality of the internet age, which is increasingly a collaborative and inclusionary space. We are playing the infinite game here. It's not a zero-sums game. And much like the internet, the crypto economy is developing a layered web of value with many different points. Interoperability is going to be key. Things like Kava are going to bring in Bitcoin-backed loans. Thorchain is going to allow for Bitcoin liquidity pools. Cosmos is going to connect all the chains together. Chainlink's going to be there just rocking out the data. And yes, DeFi, of course, will also not just be on Ethereum. It is going to be multi-chain. It's going to come on Tezos and a host of other different blockchains. But the network effect of Ethereum and the massive lead that Ethereum has over all of the other chains in terms of innovation means that Ethereum is highly likely to remain that beating heart of crypto. Now, with Ethereum, of course, there's so many use cases. You can take a permissionless loan with your collateral and receive a stablecoin back for it. You can issue synthetic assets and do margin trading on chain. You can play the lottery. You can easily swap between a whole different range of assets on increasingly liquid, decentralized exchanges. You can put up a non-fungible token piece of art as a collateral for a loan. You can issue tokenized bonds and tokenized stocks and tokenized real estate. You can do insurance on Ethereum. You can issue a security token on Ethereum. You can even do an IPO. And that is just the tip of the iceberg, my friends. And almost none of that is currently possible on Bitcoin. Currently, the overwhelming majority of value also locked in decentralized finance. That is all done with Ethereum. Ethereum is winning the race for functionality and for innovation. And while some may scoff at that very innovation that is happening on Ethereum, or promise that there will be some distant future where Bitcoin can do a fraction of the things that Ethereum does, that does not change the reality of what is happening right now. And if this is what Ethereum has been able to do in just 5 years, then imagine what Ethereum will have done by 2025. Some crazy stuff. Meanwhile, if we are lucky, the golden unstoppable tank, Bitcoin, might just get some snore signatures by 2025. Anyway, time will tell, of course. But those are, of course, just my 2 Satoshis. I would love to know your opinion. Do you think that Bitcoin needs to have decentralized finance built on top of it? What do you think about Anthony Pompliano's statements about Ethereum as money? Do you think that there will only ever be one chain? Or are Bitcoin and Ethereum actually a match made in heaven? You will let me know your opinions on those questions or anything else I discussed in this video down below in the comment section. Just a daily reminder for you as well. You are freaking awesome. You've got this. You're way more powerful than you know. And just a massive thank you for continuing to support the channel. It means the world to me. So thank you so much. And of course, if you did enjoy today's video, just a little quick thumbs up would be super awesome. My YouTube bosses would really love for you to do that. Anyway, and to make sure if you're new around here, subscribe to the channel. You guys know what's up. Long live the blockchain. And peace out till next time.